1210, Wintrust Business Lunch. Here again, Craig Bolanos, the co-founder and wealth advisor at VestGen Wealth Partners. The website is getretiredstayretired.com. Hey, listen, Craig, I thought that maybe the markets would be a little bit stronger today, given the easement of some of the tariffs with China, and that there is a deal, albeit a lot of carve-outs, but maybe those are good things, too, with Great Britain. What's your thought about what's happened in the last 24 hours?
Well, my thought on what's happened in the last 24 hours is at least we know now that there is going to be some level of tariffs that are permanent. I'm hoping that we land on 10 to 15%. That's clearly what the UK deal tells us. But coming into a Friday, coming into a weekend when the U.S. meets with China in Switzerland on trade, traders don't want to be long this market into the weekend, not knowing what's going to happen. And, John, we've seen a 5,000-point pop on the Dow Jones Industrial Average from 36,000 and change at the lows to 41,000 today. Doesn't bother me that the market's taking a sigh of relief in advance of Mother's Day.
Where does your timeline come to 36,000? Where are you drawing that point from?
Well, I mean, we were intraday. If you look intraday at how horrific it got in the couple of trading days, Thursday, Friday, and Monday after the Rose Garden speech, it was uglier than ugly. I mean, this has been a roller coaster that rivals the Great Demon or the American Eagle for those that used to go to Great America like I did.
Well, it's funny because I count backwards from 45,000, so to me we're 5,000 off. You're counting forward from 36,000, and boy, this is a classic. The glass is half full, isn't it?
You know, is the glass half full or half empty? It depends on your lenses. But, John, I think that's why when I did your show just the other week, I said our theme for 2025 was pragmatic optimism. I think that's what still reigns clear today coming into the second week of May.
But if the idea was, are these ridiculous numbers associated with the tariffs bargaining points, you do get that sense with China. And I thought that the market would view that more favorably, that clearly we're signaling that, okay, that was an aim high, but we'll settle somewhere in the middle, that there is a negotiation to be had. And we didn't blink, but we offered the first salvo. We said, okay, how about if we take 55 points off the, what was it? It was 145 and now it's 80 or 85% tariffs. So that's quite a swing.
It's quite a swing. I think the bottom line on everything, John, is everyone's enjoyed the rally after the huge drop that you mentioned. But, you know, at the end of the day, the rally's been on actual good news. But, you know, having things that aren't as bad as feared is not good either. You know, that's what I tell everybody. You know, stuff isn't as bad as we feared, but that's not necessarily good either. And that's why I think everyone should be taking stock of what they own, visiting their retirement plan. And now that diversified portfolios, not necessarily stock indices, are at or near break even, it's a great opportunity for people to get a second chance to readjust, knowing all that they know now.
I wonder if a marginal tax bracket of 39.6% on people making $2.5 million or more will, A, generate much revenue, and B, is that something those people will actually pay, or will they get around it?
You know, I think there's a lot of independent business owners, C-suite executives that don't benefit from the concept of carried interest that some hedge funds and private equity firms do on Wall Street, John. So raising some additional revenue in an attempt to pass the big, beautiful bill, which is the tax cuts, that's what's in the news now. Is it's different to see Republicans talk about raising taxes on the wealthiest Americans, isn't it?
Do you think it would make much of a difference?
I think it would make I think it would make a difference. I think it certainly would raise revenue. At the end of the day, we don't have a revenue problem in the United States of America. We simply have a spending problem. Again, we collect 60% more revenue in tax receipts than we did 10 years ago. The problem is we spend 90% more than we did 10 years ago. So I don't know that it's revenue. I think it's spending that both sides of the aisle need to do better with.
We want to ask you about Bitcoin and some of these other issues in a minute. Stay right there. We're talking with Craig Bolanos, the co-founder and wealth advisor at VestGen Wealth Partners. Let's go into the